Hello, my dear friends. This is CA Chinmay Hegde, your learning partner for understanding financial management. Welcome to day 3 on Let's Learn SFM practically. First of all, disclaimer, this video is only for education purpose. Any investment you want to make, please do it at your own risk. Before we go further, let me just clarify some doubts which was there from the previous session. One of the doubts was, what do you mean by the word flat? So when the market is going up, the market is coming down, when the market is not moving anywhere, that is, it's not moving too much upside, not moving too much downside, it's called as flat. And one more question what I've got is regarding in case of breakouts, if I wait for the breakout, do I miss the running bus because the movement would have already happened? Yes, that's the call you have to make out. You have to take the call. If you want to take the risk, then the moment the breakout happens, you take the trade. If it was a false breakout, you end up loss. If it was the proper breakout, you end up making profit. Uh, if you wait for confirmation, you avoid the loss, the false breakout, but your profit chances also gets reduced. That is the rules anywhere, that you take the risk and you will be awarded with higher return. You don't want to take that chance, definitely your profitability also will be reduced. Okay, so let's come to today's topic. So today we don't have the markets. So we don't have the last 2 points, previous events and future assessments, that is not there. So today, being a Sunday, let's make use to understand some concepts, fundamental concepts. And I'm sure most of India is under lockdown and people are thinking differently. Some people are trying to work against the government and some people are trying to defend the government. Let us not do all of those. Let us do our job, that is to learn and make it use of it. Then you can earn. Okay, so what is going to be the today's target, today's discussion? Before that, let us start with a simple quotation of the day given by the great Warren Buffett, that is, price is what you pay, value is what you get. A very important terminology, and today's session we will be focusing on this concept. Today's session might be extended a little bit, not like a half an hour, 1 hour, of course, not like a regular session, but more than our regular 10 to 15 minutes, because we are talking about two big words, fundamental analysis, technical analysis. So it will take some time, so bear with me. Price is what you pay, value is what you get. So you talk about a product, let's say you talk about a fruit. What everybody pays in the market is same, but what the benefit you get, for a normal person it might be different, for a patient it might be different, for a person who is hungry the value may be different, for the person who has finished his lunch and he wants fruits after that, his utility level, satisfaction level will be different. So price is determined by market and depends on market forces, demand and supply. Whereas value is determined by individual requirements and it is more of a perception level and it differs from person to person and also situation to situation basis. So now we are going into that world, that is on fundamental analysis and technical analysis. If you are a CA student, especially a CA finance student, then you will have these two terms in your syllabus also. So what is fundamentals, what is technicals? To put it into simple words, fundamental analysis means focusing on value, technical analysis means focusing on price. So what is fundamental analysis, technical analysis? Let's try to understand by taking the help of a example, that is Reliance Industries. Reliance Industries. First of all, in fundamental analysis, there are three layers before you come to the stock. They say like a macroeconomic level, sector level, specific company level, while choosing the stocks. Here I've straight away gone for the one stock, so I'm not looking at the three layers. In the coming days, we'll try to explore more possibilities and more methods. So I've already chosen the company Reliance Industries so that everybody is aware of it. And if I tell you something, you'll be able to follow it very closely. So first of all, fundamental means what? You are investing in a company. Keep it in mind, you are investing in a company is almost equal to you are starting a business. Or other words, I can say business already started and you are going to be part of, or you are going to become a partner in it. Becoming a shareholder is like becoming a partner in an existing business. So will you give money to anybody? Now, will you give money to any sector, any business? That is the question you have to ask. So first thing is, when you choose a company to invest or to trade, focus on the business, the sector. Or more importantly, I would say focus on the people, because more than the return, you should always focus on the people. Anywhere you go, before you try to understand what they do, first you have to understand who is that person. The trust always comes first. Correct? Even when you go to, let's say you select a college or you select anything for that matter, or you say that I consume this product, the trust always comes first. So when you select a company, first focus on people, or I will say management. I've seen lot of videos available in the public domain. Most people talk about ratios, that this profits, they are important, but more than that, in my opinion, you have to focus on people. Because if the corporate governance, the management, the board of directors, if there is a problem with that, you don't have confidence in what they have done, are they going to do well, are they capable of it? If you don't get the confidence, never invest in that company. So Reliance, is headed by Mukesh Ambani. So I don't have to talk about it. You're aware of it. So no problem as far as the Reliance industries are concerned. Other industry, when you have to invest, please focus on their leaders, be it Infosys, TCS, or Kingfisher in olden days. Okay, so focus on the people. Second, you have to focus on their business model, or it's whatever I say, financials. I'm going to show you that here, and of course, whatever is going to be the future prospect. So looking at the Reliance Industries, they are into various sectors. So investing in Reliance company itself is like investing in a portfolio. They are into petrochemicals, petroleum extraction, oil and extraction. That is their main line of business, used to be. Then telecommunication, they have Reliance Fresh, Reliance Digital, Reliance Geo, and whatnot. So the company is well diversified. They are not having a risk of concentration of a particular sector like Infosys, who are only into software. Does not make Infosys a bad company, but this is one more layer which works in favor of Reliance. Okay, now let's look at their financials. For financials, there are various terms to understand. So I would like to focus on one important valuation ratio, which is called as PE ratio. It is not the ultimatum ratio, still it's very popular, simple, yet effective among others ratios. You should not make your decision based on single ratio, but this is the simplest yet effective ratio. Price earning ratio. Formula wise, you would know MPS by EPS. But this to be understood in slightly different manner, what is the objective of a business? A business objective is to make profits. And how do you start a business? With capital, with money, with investment. So if you want to become a shareholder of a company, that is capital is your market price per share. The price per share what you pay. And profit what you get is earnings per share. The ratio between these two, that is the ultimate starting point of a business and ending point of a business, and that is called as PE ratio, price earning ratio. It is very similar to the comparison between the rental income from house property with respect to the value of the house property. That ratio is called as P ratio. So for example, if I say P ratio is 8 times, which means if company makes 1 rupee profit, then the investors are ready to pay 8 rupees. And higher the P ratio and higher the confidence level of the investors. So if I can project what could be the EPS of the company in the coming years, with all the data available, we'll be able to predict what could be the market price, estimated market price. And EPS does not change every day. It comes yearly or quarterly for listed companies, but market price changes every day. So P ratio can change because of EPS also, can change because of MPS also, but daily fluctuations are more attributable to market price. Hence, some people don't take an absolute P ratio, they take a average P ratio. And the P ratio also, when you compare, it should be with respect to company in the same sector. You should not take in different sector because earnings visibility may not be comparable. The risk return attributes may not be comparable. So let me go to the Google website and let me show you some of the website where you can get the data from. Okay, let me go for a few things. Okay, so a blank Google sheet. So we can go to various websites. One of the popular websites is moneycontrol.com, and I'll put the number Reliance Industries. So the prices information is there. It's still processing, I think. Okay. So the objective of this session, my dear friends, is not to value the company immediately. This is just to tell you the path. You should explore more. You should work more. Number is there. Financials. Okay. So what is the factor you look at in a company? If you want to start a business yourself, you would look at company should be profitable here and company should be growing company. We don't want to invest in a company which is falling down. We want the company to grow. We don't want them to take too much of debt. So for that purpose, you can look at the balance sheet. Balance sheet purpose, you will tell you what is the financial position as on a particular date. So let's look at the for example, if you look up this one, so you see the first one is March 21, then 20. So first latest year, then oldest year. So if you look at the borrowings, long-term borrowings is about 1,60,000 crores. So they have good amount of borrowings. Short-term borrowings also there. So they have taken a decent amount of debt. But there is a news. I mean, Mukesh Ambani has already announced that he's trying to make the company debt-free, so that the company will have a lesser risk. That is his financial policy. Anyway, so like that, please try to explore more financials. I will focus on ratio analysis because that is where I want to give a quick review of that ratios. So what you look at, profitability, company should be good and the company should be efficient in using its resources. So for that, various ratios are there. You can see PBDIT margin, that is profit before depreciation interest tax, 19%, 19%. So it's around that 19% flat. Net profit margin 13%. You see, it was 9% previously, now 13%. So the net profitability has increased from 9% to 13%. Return on equity is on a lower side. ROE, we say, is on a lower side. Return on capital employed is also on a lower side. Various ratios are available. Please go through that. I will focus on the valuation ratios. One second. I'll just go back. If I can see some ratios here itself. Okay. So many types of ratios are there. Let me focus on valuation ratios. You see, PE, price to earnings. Look at the trend. Price to earnings have been increasing, right? So it was 6 in 2017, and now it is almost 26. That means the confidence have increased. Earlier the confidence was 6 times earnings. Now the confidence is 26 times the earnings. The confidence increased. Why confidence increased? Because the industry, the nature of the Reliance have increased. Recently they are revolutionizing the telecommunication. They are coming with Reliance Geo. They are coming with Reliance, what do you say, the retail. That they are having a tab with companies like Facebook. So confidence have increased, and that's for the ratio is also increased. Many more ratios are there. This is not the time to spend everything, but P ratio is the basic one. Now let me give you one more simple concept. How the fundamental analysis itself can be different. So I'll say Reliance Industries fundamental analysis. You see, different websites are there. You please explore. I'll just show you one for example purpose. Uh, I'll just trying to open few. Okay, you see, these people are giving so many charts. Smart investing, ROC, how much Reliance Industries has compared to its peers, how the sales is growing, what is their P ratio as of now. So many websites are there, so many analysis is there. These lockdown times, please make use of it. Go through these websites. I'm not going to teach you how to read this. You try to learn yourself, but I'm showing you the path. Okay, let's see if I can show you something. Okay, you see how they have done analysis. Current ratio 0.56, more than 2 is good, less than 2 is not good. So they have given the description. What about this company? Debt equity ratio 0.7, less than 2 is good. They have given their assessments. People can view differently. So this kind of analysis, by looking at the fundamental aspects, the strong foundation, who runs the business, how much money they have, are they growing, are they investing, is the leader reliable, what is their historical pattern in the profitability, financial statements, financial positions, are they using the fixed assets, their debt equity ratio is good, liquid ratio is good, are they paying the creditors? How is their working capital management? Are they paying suppliers good? Any issues with the employees? Any issues with the legal department? Like, are they paying taxes on time? So these kind of basically trying to tell this person is a good person. He behaves well. That is what is called as fundamental analysis, and focus is on value, and main focus will be on ratios and on the valuation perspective. One simple ratio what you can learn is PE ratio, price earning ratio. So that will tell you the confidence level of the investors in the company. That is fundamental analysis. Next, we have technical analysis, that is purely looking at the charts. I was discussing with you people yesterday the support, resistance, and all. We had looked at Reliance Industry, I think. Nevertheless, let us look at Reliance Industries once more. The charts. Okay, so I hope you can see this chart. Yes. Okay, so I'll just put for 6 months chart. You see the pattern. Red, you know, it's a candle which is down, green which is going up. You see how beautifully the patterns are formed. The stock is down, up, down, up, down, up, down, up, down. So you can see this line, right? You can see, if you look at the bottom level, this purely, see beautifully it indicates a support level. This is support 1, I will say, and this is support 2, because it's broken down, gone further, then reversed it. So what is this support line would be around 1800, I think 1890, I'll say approximately 1900. Now the stock is at a perfect support level. Now if the stock breaks down, then what is the next support? Next support is around 1840 rupees. So if 1900 is broken down, wait for a price action. wait for some more fall down, it can go as down to 1840. You know, the stock looking bearish. It is trying to, it has a chances of going down. And even in the prices are falling situation, you can make profits. You can take care of, you can use options, you can use futures, derivatives. I'll discuss it later. Or even if you have existing stock also, you can make profit when the stocks are falling down. I will tell you later. I will not touch upon this point now. So this, at this point in time, it's a support level. And if you look for some more days, let's say a week or something, if it breaks down, it can go as low as 2840. But if it reverses, then the stock price will go up. You see, this is the next resistance. 2042 is the resistance 1. So if it starts increasing, it can go up to that. The second resistance will be this, that is 2120. And the third resistance will be this around 2200. You see, at point like this, you can decide when to enter, when to exit. Now at a support level, if the price starts going up, I will buy. When I'll sell, at the resistance level, I will sell. No, I want more profit. Okay, wait. If it crosses that resistance level, then second resistance level, there I will sell. See, it's very important. Not only identifying the good stock, you have to buy at a right time, sell at a right time, and that is called as technical analysis. Now, some people have seen buying the stock just because the stock is falling. No, that's a very bad approach. So that may be a good thing, provided are you having the confidence in the company. To put it to simple words, follow these steps, my dear friends. Whether you want to invest for a long term or you want to invest for a trade, first look at the company. Who are the people behind it? Are they financially good? What the people are telling? What the price earnings ratio is telling? That is first step. Then look at in which level the stock is in. Like Reliance now is at a support level. Some other stock might be at a higher level, or it might be in a trending level. That is called as technical analysis. Various kinds of technical analysis, various kinds of charts, various kinds of indicators, various kinds of interpretations are possible. We will not be able to learn everything at a time. But I hope you got an idea about what is fundamental analysis, what is technical analysis, and how we can make use of it. You have to spend more time on more number of companies if you want to get a more control. I hope this special session on a Sunday is useful to you. Hope your time is made useful to a certain extent. I'm getting some questions like what is price to book ratio, which limit is good, 5 minutes, 10 minutes, 30 minutes. They're all different points of view. Many ratios are there. Maybe I take a separate session. PB ratio means price to book. Book value how much, market price how much. And what limit is good? Again, these are all more of a individual factors depending on your time horizon. If you are planning to do a daily trading, 1 day candles are good. If you are planning to do a intraday trading, maybe 5 minutes is good. So this comes more with practice and with experience. There is no hard and fast rule. Definitely I'm not telling something is good or bad. But please try to analyze. Please try to follow the patterns. Before you invest, look at the charts. Is your strategy working? Try to spend some time. Do some research before you do blind investing. How to take targets? As I just told you, many methods are there. The simplest one is to go for resistance level. In the support level, I would like to take an entry. In the resistance level, I would like to take an exit. A simple, yet let me tell you, it's a very effective approach. If time permits, in the coming days, I will do live trading and show you whether we actually make a profit or not. You want a chart analysis on NIIT share price. Okay, particular companies, I'm not focusing on that yet. We are in the initial days. I've just taken Reliance because most people will know it. hoping that you can expand this understanding to many other companies. So much of data is available in the public domain. Internet is available. You may be locked down. Internet is not. That's one of the reason I like Reliance, because Reliance provides Geo and we are depending on Geo mostly for internet purpose. Of course, broadband is also there. So Airtel is also a good company. Anyway, so that's it for today. Hope this session was value addition to your understanding, and I hope you don't limit your understanding to this. You have to expand. This is just a session to show you the path. It's your responsibility to walk the path. I hope you enjoyed the session today. We'll see you tomorrow at the same time with the market analysis before the market opens. So till then, take care. See you. Bye bye.